let's ask Rudra Murthy B.V about what he's making of the markets right now. Rudra, hi, morning. Great to have you on the show. Rudra, what's the call on the Nifty right now, given the fact that we've managed to defend 24K quite nicely?
Good morning, Aisha. Thanks for having me in the show. See, Nifty is just consolidating in this 500-point broad range, which is from 23,800, which is acting as a very strong support. And on the upside, yes, resistance is kicking in at 24,300. So between this 23,800 to 24,300, market is just holding that support and resistance, and it is very sector specific and stock specific. But one thing is very clear, in spite of all geopolitical tensions around, market is now not reacting to those negative news. Also, crude oil no doubt came up to $70, again bounced back to $85. But still, Brent is also not now reacting to those negative news from geopolitical tensions, which is a good sign. So one thing is very clear, market is now not reacting into those news because it has already seen the reaction earlier, and earnings season will play out, and that will be very, very important. You have to be very sector specific and stock specific in this market. So I will wait for Nifty to break out of this range of 23,800 to 24,300 before I take a positional call on Nifty. And similarly, if you see Bank Nifty, support comes at 57,000 and there is resistance at 58,500. So I'll be very sector specific and stock specific in this market. Have your eyes, ears, everything open in terms of the result season, and look at sectors like capital goods, new age and platform, and even NBFCs and select banks, which are doing very, very strong. And you have to be very sector specific till you get a breakout from this range.
Absolutely. So, Rudra, what would be your stock-specific or sectoral bias, given the kind of churn that we've seen even sector-wise in the markets?
See, for me, sectors such as new age and platform theme, or even for that matter, selective banks, NBFCs are looking very strong to me. Capital goods had a great move yesterday. It can definitely continue. So these are some pockets where I relatively see a lot of strength. And if I have to pick some stocks, look at Union Bank. On chart, yes, the stock consolidated and gave a clear breakout above levels of 170. And for me, yes, PSU banks, after the beating down what it saw, the results also was very good, and even chartically the stock is now consolidating and it can clearly move towards levels of 178, 180, and even eventually 195, 200 is also possible on Union Bank. So I'll be going long on Union Bank. Stock available in futures also. Look at initial target of 178 and then eventually 190, 200 to come. Have a stop loss of 168 for this long call on Union Bank. For me, even Shriram Finance, another NBFC, looks very strong. This stock at around 1,000, 1,010 will be a great buying opportunity. So even at current market price and on dips to those levels, I will be a buyer. Look at targets of 1,080, 1,100 to initially come, and then keep a stop loss of 1,000 for this long call. So a buy on Union Bank and a buy on Shriram Finance.
Rudra, hi, morning. How do you look at some of the IT pack, TCS, Infosys? Today you have Tech Mahindra and Wipro earnings also. So how do you look at those tech stocks?
Sachit, good morning. And you have to be very stock specific when it comes to IT as a sector. No doubt, number one, I am very clear, no shorting in this sector. Now the opportunity which was there before is already over. But then yes, buying has emerged. Unless you are a very long-term investor looking for next 2 to 3 years kind of a horizon, then yes, valuation comfort is there, margin of safety is there. You can pick some of the names. Like for example, look at Coforge, look at even Oracle Finance. And these are a few specific pockets where there is strength. Even yesterday, LTTS came out with good numbers, and that was definitely on the positive side. So you have to choose and pick stocks if you are looking at IT as a sector and have a longer time horizon because of the valuation comfort what you have right now. But if you are a momentum kind of a trader, I will still avoid IT, I will avoid metals. These are some of the pockets where there is relatively weakness seen, and you have to be very stock specific and a long-term investor if you have to pick stocks from both IT as well as metals.
Right, okay. Tech Mahindra, that's the one which is in focus.
Wait for some dip to levels closer to those might be 500 zone, because clear breakout for Kalyan came at around 450, and once it moved beyond 450, there was a non-stop rally towards that 540, 550 zone, I will wait for some dip in this stock which can come to levels closer to that 510, 520 and look at still a buying opportunity in Kalyan. But if you already have long position, hold on. The stock will definitely move further and it can go even till levels closer to 620, 650 zone. But yes, if you want to enter fresh, wait for a dip closer to 510, 520 and then buy into Kalyan. Patanjali is a great no-no, and this stock even after yesterday's fall, if you see last 1 year chart of Patanjali, it has eroded close to 50% of wealth and there is no buying whatsoever in Patanjali even here. Even if you are a long-term investor, I don't see any bottom formation nor the stock showing those signs of reversal. And yesterday's volume was so high and irrespective of whatever news as such, stock is just collapsing like no tomorrow. So for me, Patanjali is a great avoid. Even at current price after yesterday's fall, I will definitely not buy Patanjali. If you have it, any bounce to levels closer to 360, 370, I will look at exiting Patanjali, and Kalyan is a buy on every dip.
With regard to insurers, Lombard as well as ICICI Pru Life, let me throw that in as well, and HDFC Life. The life insurance segment per se is posting good numbers. I know you don't look at it fundamentally, but technically, how are some of these names looking like on charts?
Harsh, good morning. First of all, for me, this is a sector which is showing signs of consolidation on chart. Whether it is HDFC Life, SBI Life, or even ICICI Lombard, all these stocks are showing definite signs of consolidation. If you are a short-term trader looking for momentum, I will avoid this sector as such. But if you have to pick one stock or two top stocks from this insurance sector, I will go first with HDFC Life and then with SBI Life. So for me, these are two stocks which look relatively stronger. Yes, HDFC Life and SBI Life will be my top two pick. When it comes to levels on SBI Life, any dips to levels closer to that 1,800, 1,820, you can definitely look at going long on SBI Life. It can move towards that level of 1,920 and again go back to those higher levels of 1,950. So for me, SBI Life looks strong, and even HDFC Life, any dips in this stock from current market price to levels closer to that 540, I will be a buyer in even HDFC Life. So two stocks from this sector will be SBI Life and HDFC Life.
So you prefer the life insurers. Let me also bring in Meryl. She's here with some of the stocks you want to keep on your radar for today's trade.